Hi, good evening. Today is September 3rd, 2019, approximately 7:55 Eastern Standard Time. My name is Olawale Okabola with Spartacus Trading Corporation, where serious advanced traders come to train and learn. Here to bring you the recap, which isn't much for September 3rd, and also to bring you the prep report for tomorrow's session, which will be September 4th. So let's just jump right into it. Not much to talk about on the monthly. I went into detail about the how important the monthly open and also the monthly settle. Monthly open for September, which is here. The monthly settle for August, which is there. Please refer to the recap and prep report for November 2nd and going into November 3rd as far as detail regarding that. There's no change from that report. Going on to the weekly. Not much has changed for the weekly. We're still in this 3, 4, 5 week balance area. I believe we're still above the half backs of those balance this balance area, the 5 week half back, and also within the 5 weeks, we're in a 6 week balance area. So not much is going on, not much to talk about. The only thing of note for you all to pay attention to is that we're making higher lows on the weekly. So we could be setting up for maybe a breakout of the weekly. Stops are probably accumulating above and below. We're to the daily. Today we're at a 2 day balance area, pretty much an inside day. Today closed within the range of Monday, and we got a doji. So an indecision, pretty much balanced, nothing going on. You want to pay attention to the 2 day balance area half back. You'll take the high and the low of Monday, divide by two, that give you 2 day half back. Just to give you some kind of idea, tomorrow when we trade, are we above or below the halfway mark of this 2 day balance area? Now to the profiles. I talked about on the prep report from yesterday the importance of closing this double distribution. It could be, and I say could be, a signal that we could be trading up if this is filled. It did get filled, however, the market traded off, as you can see. Nothing. I'm not showing you anything you can't see for yourself. And pretty much balanced. It was just a rotation day. The most important thing is that this double distribution was closed. We got a poor high. We got a prominent point of control that hasn't been revisited. Basically, stops continue to accumulate above, I would say, today's high, Monday's high, so on and so forth. On the flip side, on the downside, once you realize value was not developing, I talked about once you close this double distribution from yesterday, you want value to begin to at least overlap and develop higher for continuation. We closed it. We did not get any continuation. We actually were trading lower. So if you were had the right orientation with value and seeing value was developing below this double distribution that was closed today, it would have automatically have you thinking short, and the market traded off, of course. And about time the other traders caught on to what was going on with the liquidation break, they ended up getting caught, and we got the rotation going back and forth. So headed into tomorrow, which is the fourth, what are we going to look out for? First thing I'm going to do is play the breakout from the inside day. Typically, how the breakout is played is you go with the breakout from either extreme, whether it's from the low, from the high. Basically, all bets are off when you hit the prior day's extreme. So, for example, if it was a breakout from the high, all bets are off once we get to this high. But this is a poor high, so there could be more continuation higher. And we talked about some stops more than likely are up above here. On the flip side, you play the breakout from the downside of the low of today to the downside. All bets are off when you get to this low right here at the Monday's low. For continuation, let's say for example to the downside, you want to see lower value, one time framing. Possible destination could be this point of control that's 10 wide that has not been revisited. You break out to the upside, possible destination is this 10 wide point of control that hasn't been revisited as well. One thing I want you to be cautious of, the nuance. If we do break out to the upside or if we gap and cannot hold the gap to the outside, be careful because we have some weak structure that was left behind when the market started to cover towards the end of the day, and I will show you that. Okay, this is the overnight low. They bought from the overnight low, and also they bought right at the value area low. They being short-term traders or those who are covering. So we got those two weak lows accounted for. Also, here's the settle where the market closed. We have a couple of anomalies here and here. So we got those two anomalies. We have the where they bought off the value area low from yesterday. They bought off the overnight low. So the odds are stacking. Well, the odds are saying basically we could use some an inventory adjustment. Now, I only point this out that if we do not revisit any of this and we trade higher tomorrow and the market cannot get any acceptance outside of today's range, today's high, and we had not visited any of this structure below as well as this point of control that is 10 wide, being the fact that it's pretty prominent, we could get some liquidation and begin to challenge or at least attempt to take out these weak references. So something to be aware of. So if you're going with the breakout from the inside day to the upside, you want that breakout to hold. You do not want to continue to come in and out of yesterday's range. On the flip side, to the downside, you break out, you want to see lower value, you want to see value begin to extend below yesterday's low. You want to see value begin to overlap Monday's low with some one time framing should get you to this point of control, which is 10 wide. After that, all bets are off. So that's all I got. Basically, going into tomorrow, you want to uh, play the inside day. Also, there is a bit of a zone that you want to be aware of just to keep you out of trouble. I call it a chop zone. Is where the market is. I don't know if there's any opportunities within this zone. As for me, it's something I will be paying attention to. I call it a chop zone because more than likely within this zone from '06 half to 98 quarter, more than likely you probably will get some chop. So I would like to see a breakout and acceptance outside of these zones ahead of the breakout from the inside day. So I'm giving you answers to the test going in either direction. That's really all I got. Hope this information helps you out. This is Olawale Okabola with Spartacus Trading Corporation, your e-mini specialist. Have a good night.